But first, got to get to what's going on both the macro and the micro front and turn to what happened with those consumer prices, as I mentioned, rising over year, 5.4%. Our Brian Cheung is on the case covering those numbers. We've all been waiting for these inflation numbers, and there were some interesting sort of components within this overall report.
Yeah, Julie. Well, Sparky might be right. Woof might be the response to the consumer price index numbers that we got this morning. This coming from the Bureau of Labor Statistics covering the month of September. And the price index showing prices rising by 0.4% on a month over month basis when you're looking at the month of September. That was above the street's estimates of 0.3% that we had seen as estimates from the street. Now, on a year over year basis, that came in at 5.4%. That was much hotter, not much hotter, but definitely above the street's estimates. They were expecting something closer to 5.3% for the index. Now, when you strip out those more volatile components like food and energy on a month over month basis, it came in at 0.2% of an increase. If you're looking at year over year, comparing September 2020 to September 2021, that clocked in at 4%. Now, what's interesting about this report is that those more transitory factors that Fed officials had been talking about have been starting to fall out. Consider some of the reopening trades when you kind of parse out some of the more specific categories in the CPI. Airline fares going down 6.4% on a month over month basis. Car and truck rentals going down by 2.9% on a month over month basis. And we know that a lot of those in team transitory have been pointing to used car and truck prices, that falling by 0.7%. Now, one interesting thing that's worth mentioning is also shelter. Shelter did increase by 0.4%. This could be something that could be a little bit more persistent, so worth watching in future CPI prints. And then I wanted to add this one category for Brian Sozzi. Uncooked beef steaks have been up 4.8% month over month, which might explain the rising price tag for that tomahawk steak that I know you bought earlier in the week, Brian. But again, interesting to see consumer price index on a headline basis beating the street's estimates.
Well, thank you for tuning into Yahoo Finance Live, Brian Cheung. Let me ask you, though, this is the last CPI report ahead of the next Fed meeting. Should the bulls be barking up a storm right now in discontent, really under the assumption that the Fed is maybe a little more aggressive with their tapering program?
Well, this is going to certainly be a communication challenge for the Fed. Now, I do want to caution that even though this CPI print was hotter than the street expected, this is still kind of in line with what the Federal Reserve has been saying, which is that we do expect these price pressures to be hot, but that they do expect them to fade over time. The difference is that if you're looking at the Fed communications, say in the earlier part of the summer, they were hoping that would fade by now. What Fed officials are saying now is that they expect these types of pressures to last through the middle of next year. Now, of course, whether or not the Federal Reserve will continue to kind of move that yardstick back and back and back as we continue to get these hot prints remains a question. But even the more dovish members of the Federal Reserve that have insisted that some of these inflationary pressures will likely abate over time have been saying, actually, this is a bit more persistent than I expected, but they still expect it to be transitory over, let's say, that 12 to 18 month period. So again, I think the question is not necessarily whether we'll get a dip in the CPI or the PCE inflation readings over, let's say, the winter, but whether or not they will stay high through the middle parts of next spring. So if you start to see these hot prints in, say, March or April next year, during that time, the Fed might be wrapped up with its tapering program, depending on when they start it. But maybe that is when they start to have that rates discussion about whether or not they should raise the interest rates from their current target level of near zero, guys.
And yesterday, we learned that the Federal Reserve President of the Bank of Atlanta, Raphael Bostic, he said in a speech he has a jar in his office where if you say transitory, you put $1. And he did that during the speech, the so-called dirty word right now within these discussions.